Good day. You are welcome to my channel. This is Kevin Davis Accounting. So, previously I started looking at cost segregation and estimation. Now, today I would like us to look at cost segregation and estimation, but with a step up in fixed costs. Now, when there's a step up, remember I told that fixed costs can actually step up, especially if they go beyond a certain range of output levels. Like I told you that if a room can contain 100 items, that means anytime you're producing below 100 items, you use that room. So that means you're going to be paying a constant fixed cost of that. But then it comes to a scenario whereby now those items become 140. If they become 140, that means you're going to be required or pushed to find another room for the 40 items extra. So that means your fixed cost is going to have a step up. If it was $10, it's going to become $20. So there's a step up in fixed cost. Now, this is the challenge. It's always hard for us to calculate the variable cost per unit when the fixed costs are not the same. So let me just give you an example. Like we have our output levels, and then we have our total costs here. So we can have 3,000, and we have associated cost of 20,000 Ghana shillings, and then we have 5,000 production units, and then we shall have 31,000 as total cost. Then they tell you fixed cost increases by 1,000 when output exceeds maybe 4,000 units. Okay, now look at such a scenario whereby they are saying that fixed cost increases by 1,000 when output exceeds 4,000. So like I told you that when fixed cost is not the same, it is always hard for us to come up with a variable cost per unit because the fixed cost is not the same. Now, if we find such a scenario and they are telling us this is what we are going to do. Either you increase, okay? Now remember, for example, like this, because you have to make sure that fixed cost is the same. So either you increase the lowest associated level, the cost which is associated with the lowest activity level with 1,000 also, or you deduct 1,000 from this so that we can have at least the same, because this is inflated, okay? That means there's an extra 1,000 already included here. So that means we cannot calculate the what? The variable cost per unit. So that's what I'm trying to say. We can calculate our variable cost per unit like this. Remember, it is cost of high, okay, minus cost of low. Now, if it is 31,000, it means there is an extra 1,000 which is included here in the fixed cost, okay? But now, for us to harmonize this so that we can come up with a variable cost per unit, this is what you're supposed to do. You either remove the 1,000 or you add it here when you're calculating. So I'm going to remove it here. That means we shall have 30,000 minus the 20,000. Okay. Then when you come here, you're going to subtract output levels, which is 5,000 minus the 3,000. So you end up getting 10,000 over 2,000, and you get your Uganda shillings 5 per unit. Okay, this is it. Now, this is what you're going to use to calculate. So I'm just showing an example. So you either add the 1,000 here so that you can harmonize that and you have at least the same range, okay, or you subtract this one off so that at least we can keep in the same range. So by that we can calculate the variable cost per unit. But then this one means that when we are calculating later on, we are supposed to come up with two different equations because these are two different groups, okay? So we're going to calculate and come up with two different equations for the two different ranges. All right, so allow me to rub off this and then I take you through a certain question, then I will show you how we can go about this. So This is the question, and I want us to do it together. It says, a company has identified that total fixed cost increases by 15,000 when activity level equals or exceeds 19,000 units. The variable cost per unit is constant over this range of activity. Okay? The company has identified two costs at two activity levels. So you are required, so they've given us the output levels, of course, in units, and then our total costs. So the high, it has an output of 22,000 and a total cost of 195,000. The low has an output of 17,000 and 165,000. And they're saying you are required to use the high-low method to find the variable cost per unit and estimate the total cost that will be incurred in producing A, 25 units, B, 14,000 units. So that's the question they've given us. Okay, so we realize that our high and low. So we're going to have our units here, and you're going to have our total cost. So they're saying the lowest unit or output is 22,000. Then the lowest is 17,000. And then they're telling us that the total cost is 195,000 for the high, and then for the low, it is 165,000. Okay, so this is our display. But now the question said something. It said that the total fixed cost increases by 15,000 when activity level exceeds 19,000 units. So they have said when activity level or our levels of output, okay, of course these are output. Now, if our levels of output exceed 19,000, there is an extra 15,000 that is added on. So it means here we have an extra 15,000 because this 22,000 is greater than the 19,000 units. But rather this one is 17,000. So it means there is no 15,000 included here. Okay? And then because of that, that's when the arrow is going to come in. Either you add or you subtract the 15,000, because we need to have fixed costs which are in the same range. So if fixed costs are in the same range, then we can go ahead and calculate the variable cost per unit. So this is what we are going to do. Our variable cost per unit will be, now this is what I'm going to do. I'm going to add 15,000 here. Okay, so we're going to have 195,000 minus, now 165,000 plus, okay, plus the 15,000. So you have, this one will be 180,000. Okay, then when it comes to this, I'm going to have 22,000, of course, which is the highest activity level, minus the lowest activity level, which is 17,000. Okay, then it means when you do the mathematics here, you're going to get 15,000, and here we shall have 5,000. Therefore, we are going to have Ugandan shillings 3 per unit. So that's what we have calculated. Okay, so from that, that means we are supposed to establish what they call that fixed cost. But now, remember, like I told you, that the ranges are different. So that means we are going to come up with two equations. So we're going to say this total cost equals to fixed cost plus variable cost. Okay, but you know very well that our total cost equals to fixed cost plus quantity times variable cost per unit. Okay, so this is it. Now let me start with the highest. So the highest, of course, we shall have our total cost as 195,000, and to give us a fixed cost that we are looking for, plus what is the quantity associated is 22, thousand, then you multiply by the variable cost per unit, which is 3. And therefore our fixed cost will be 129,000. So that's it. Then still we calculate for the low. So for the low we shall have total cost equals to fixed cost plus our variable cost per unit, which is quantity times variable cost per unit. Okay. Then our total cost here is 165,000. The fixed cost is what you are looking for. Then you're going to multiply by the quantity, which is 17,000 times 3. So our fixed cost is 114,000. So this is what we have. Now, these two equations are giving us something different. There's a step up in fixed cost. Now let us do the mathematics here. Realize that 129,000 and 114. See? So when you do the mathematics to get the difference here, realize this is the difference of 15,000. So the question was telling us that when the output levels exceed 19,000 units, there's a step up of 15,000. Isn't this the difference? So that's why we see that in fixed cost, there's a difference, there's a step up. It would have been this, but now because there was we exceeded the range, okay, that means there was a step up of 15,000 in fixed cost, and this is the difference that we have here. So now we're supposed to go ahead and do something. Remember they told us you're not supposed to end here, okay? We're supposed to come up with what they call the total cost equation. Now, the total cost equation for one is going to be total cost, okay? Now I'm using one for the low. Our fixed cost for the high, sorry. Our fixed cost is 129,000, okay? Plus, so our variable cost per unit was 3. So shall have 3Q. That is our equation 1. Then, when it comes to the low, we are going to have our total cost equals to, now we are going to bring this, our fixed cost is 114,000 plus our 3Q. Okay? Now, this is not it all. Remember I told you we are looking at cost segregation and estimation. Okay? We have segregated the cost. That is okay. That's very fine. But now there's an important part that you're supposed to do, which is the estimation. Now, when you go back in the question, they're telling you that they say that estimate the total cost that will be incurred in producing 25 units and 14,000 units. Okay, so this is what we have. We have 25,000 units and 14,000. So realize 14,000 is within this range and 25,000 is within this range. So that's what you're going to do. For the 25, it will be total cost. So which one are you going to use? You're going to use this first one because it's one which qualifies in that range. So we shall have 129,000 plus, then it will be our variable cost per unit times the 25,000. Therefore, our total cost will be 204,000. So, and this is because Ugandan shillings. Okay. So that's what we have as our total cost, 204. Then when it comes to this, we shall have our total cost equals to, because we have now the 14,000 units, and the 14,000 units fall within this range. So that means we are going to say, we shall have 114,000, okay, then plus 3 times the 14,000. Our total cost will be Ugandan shillings 165,000. So, ladies and gentlemen, this is how we have attempted our question. This is how we do cost segregation and estimation. I believe by now it is very, very easy. You can do more numbers. You can reach out to me on that number which is below your screen, and then we can talk more. Do more numbers. I believe I'm here to help you, and together we shall grow and become successful. So subscribe to the channel, share to your friends, let them also have a benefit. Tell them there's free learning taking place at Kevin Davis Accounting. Until we meet again, it's a bye for now.